What up, traders? What up, investors? Ken here from Dyslexic Investors. And what the heck happened today? Really? That was insane. We're just going to be jumping into looking at the NASDAQ and looking at some key stocks that could be potentially building up something or starting on something. But this is by far not just a complete push all the chips in kind of scenario and just go YOLO here. So let's just kind of look on what the flip-flop happened. Let me get out my John Madden pen here. I'm going to do a nice blue for him. Godspeed to him. And Bob Sakic today. God bless him too. So again, we're going to be looking at the QQQ on a 1 minute chart. Okay. So this is again going to be the understanding of, oh, wrong pencil here. Let me get this out. There we go. Great. All right. So coming on here at the 1 minute chart here, we opened up quite a lot, pretty far down here, right? We almost hit that 370 range. We did actually broke past that. Then around that time frame, we always talk about these times, especially on the intraday charts. The 9:30 to 10 o'clock is completely chaotic. It's everyone trying to rush in the store. They're trying to get that TV. They're trying to figure out why is the TV $50 or is it $100, and they're trying to reprice everything. It's a lot of morning chaotic. That usually lasts at least until 10 o'clock. And then 10 o'clock, you start seeing some more buyers coming in and potentially trying to settle down. But if the market move is very substantial on that given day, that 10:30-ish, that 10 o'clock spread goes to maybe 10:30 to even 11. So you can really see that selling kind of coming in, seeing a potential trying to bounce at times here and getting back up here, but then just ripping lower here until it finds some kind of significant no more sellers, right? Like that's the basic supply and demand there. There's not enough more, not more people are buying at that point than they are selling. Then we get like kind of this crazy euphoric rally within the next 15 minutes from the drop down there. Then it kind of gets back into kind of consolidation. They're like, actually we're gonna go back down lower here. So again, that 11 to 12:30, 1:30 time frame, that's considered like the Wild West. And that's usually, look what you see. You see the lowest amount of volume here. I'm actually gonna change my color to red so to kind of highlight this just a little bit more to really see that level there. Look at these. That's a very low level compared to what you saw over here in the beginning and then towards the tail end of the trading day. So to take note of that. So these market moves in here matter a little bit, but it matters a lot more on the front end of the market and then the close of the market. So these are going to be what am I drawing here? Oopsies. The levels here, looking at here. So again, coming out of that 1:30, 2 o'clock time frame, we're busting here. We're chugging Red Bulls. We're maybe doing a line here. I don't know. And it just kind of breaking out. Then you have that 3 o'clock switch. So it's that 3 o'clock, I call it the happy hour. So if you've ever been to a happy hour, they're sometimes good, they're sometimes great. Majority of the time, they're great, especially if you're more of a bull. In this case, it gave back quite a bit in a very steep amount of time, but then it ripped really good into the close. And that's actually a really kind of a good positive sign on that fact, if we see that kind of a rip-roaring higher into the close. So what does that mean for tomorrow? It could mean absolutely nothing, ladies and gentlemen. So again, it is a pretty interesting standpoint that we are bouncing, that we talked about on the Sunday night live stream. Again, definitely tune in for those, that we are potentially talking about hitting the 144 EMA. And guess what? We hit that mother trucker and we bounced. We hit this mother trucker and bounced. So all the talking heads and all the people on CNBC are probably saying, well, there's more pain to come. They don't know there's going to be more pain to come. I don't know if there's going to be more pain to come. As of right now, we've kind of shown some level of support here from previously large meltdowns, and they kind of been in that same significant pattern. The only a little bit downside to this one is we've been kind of choppy here longer than these were in those ranges. So that's going to be very potentially some overhead resistance on the way up. So that's going to be very mindful about that once we kind of come through. Can we go lower? Heck yeah, we can go lower, but just being mindful of what potentially could happen here. So looking here at a little bit larger time frame, we're going to be zooming out even more to the weekly side. you can really see this rip roar pattern. Like this has been going on for like, what is this, like 18 months here? The NASDAQ has really seen nothing to a significant pullback. And everyone's saying the Fed's going to cause this correction. And it did that kind of correction mentality that we saw in like 2018 into 2019, if you remember that time frame, which we also highlighted on the live stream, where it kind of overdid its hand and they raised rates a little bit too higher. So we just have to kind of wait and see. This is not an opportunity to go, again, put in all the chips and just go in full YOLO and go ludicrous mode into margin, without a doubt. This is a nice opportunity to potentially nibble if you're going to be a little bit more on the aggressive side, or a potential level to kind of maybe just try a couple hands, like maybe doing 1/3 or 1/4 the size that you normally kind of trade on that sense. So looking at that fact, I wanted to kind of point out a couple charts that kind of came to the forefront of my mind that have been selling off for the past coming weeks, and Adobe is one of those. So coming here looking at Adobe, this stock has been really, I wouldn't say cut in half, but it's definitely got a pretty severe haircut. And coming back into these potential targets again with the higher rates, interest rates going up via the Fed, and then basically like saying, hey, we're just gonna stop buying things and maybe actually start selling things. That put a lot of shock on these like high growth stocks that potentially had very high multiples for year-over-year growth and things like that. So it's gonna have to be like recalibrated and find the new normal. Especially this one has definitely been got that haircut. We talked about multiple gap downs, large red candles, a smorgasbord of volume here. Again, well, this is on the daily chart here. We kind of highlighted this ever so slightly via the Fibonacci extensions here from the previous swing high to the tippy top high. We talked that level here around 500. We talked about that on the live stream just yesterday, and that potentially this could be a pretty significant bounce, and coming back up to the 550 range would be normal. Like that's basically somewhat expected. Once it hits that level, that could be getting ready to recalibrate and maybe pull back a little bit lower. So the thing you have to remember is, if you're going to be trading these kind of stocks, it's going to be a very short time frame, and potentially looking for very small position sizes, because they can snap back like that. Like what happened today to the bulls can easily happen to the bears playing field in the same day. So just have to remember that, and being very mindful of that potential target. Another one we talked about on the live stream was JD. That thing had a pretty nice bounce today with Alibaba. A lot of these Chinese stocks really didn't get hit as hard as other stocks, right? JD kind of held its own. Like it didn't sink, Alibaba didn't really sink with the other overall market. A lot of Chinese stocks did actually fairly well compared to some of the U.S. growth stocks. Another one that we wanted to look at was Roblox. So again, Roblox kind of had that little, we talked about that potential level here around $86 kind of potentially holding. ARK funds, this is the ARK Innovation Fund. And then, of course, we can look at RK, Kathy Woods, the ARK Innovation Fund. That kind of saw somewhat of a bounce here. But again, like I'm saying this with a grain of salt, these are not a significant support level. These are just potential levels of building a base here. We need to see this potentially drawn out. We need to see some of that fear evaporate outside of the overall indexes and the stocks. And again, being ready for anything to kind of come our way. So just being very mindful of that, and give yourself a head check to make sure that that is what you're understanding. QCOM or Qualcomm has definitely been a monster as well here, pulling back pretty substantially today, but bouncing off that level around 175 and coming back. So a lot of these stocks have seen these kind of like pretty like elastic bounces coming in through here. The one I'm going to save best for last, of course, is Tesla. Like that thing, we talked about this 987 level to potentially being a bounce. That thing, it didn't hit it by with a T, by dotted the I or cross the T, whatever the stupid saying is. It definitely did bounce off of that level here. So we're looking for this potentially to come back up to at least potentially 1100 to 11 or so to 1080 potentially. But again, then things have to kind of get rechecked. Like you only can bounce so much until gravity kind of pulls you back down in reality in this case. So just being mindful about that and being very careful and understanding that things are a little bit different than they were last year. And I think it's what happened with a lot of people last year, where they thought 2020 is just going to continue to go. And the beginning of, if you recall, 2021, we had a pretty massive sell-off. Again, we had that high in basically mid of February, and we pulled back nearly 12% in the QQQs just in a matter of like 2 or 3 weeks. So that's something that could be in the cards to flush things out. As of speaking right now, it looks like I don't know, we're not that. I think we're, what was it? I said 8% or something like that. We went down. We're right about 8.5%. So we could easily maybe kind of level off here a little bit and maybe get a little bit lower. Just be careful out there. And again, just don't. This is the beginning of the year. Don't try to make your year in the first month. Like, just being very mindful about that. I cannot stress that enough. All right, guys, ladies and gentlemen, have a fantastic day. If you have any questions, put it in the comments down section below. I'll see you in the Discord, and I'll catch you guys on the flip side. Peace.